Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. And, I deal nationwide with investors. I've got them from all over the United States, especially on the East Coast and, of course, the far West Coast with technology people. And so it's a strong market for us. People of high incomes, especially buying properties, setting themselves up for retirement or extra income. And, I compete against a lot of places all over. I compete against Florida. I compete against North Carolina, against Texas, you name it. I can compete against it. And I saw some numbers out of Florida the other day that somebody was telling me about, and it really disturbed me. And the reason why it disturbed me is because I own property in Florida. And I can tell you the insurance market in Florida compared to Oklahoma City is a whole different animal. In fact, the people that we have in Oklahoma City have pulled out in the Florida market. They don't want to have anything to do with Florida. A lot of people who own property free and clear here are not even getting insurance. So when I saw this insurance rate, and it was a comparable rate to Oklahoma City, it caused me to worry. And here's why. I've seen this before, because I compete nationwide, and I've seen these spreadsheets, and I'm going, how are you doing that at $55 a month, when it should be $150? It's very simple. Again, there's various things, and I've said this before, there's various things that affect your insurance rate. Let's start with liability. So, in Oklahoma, we're going to give you $1 million per home liability policy with our insurers. The reason why is because people can sue you, and they don't sue you for $500 or $5,000. They may sue you for $500,000. We want to make sure that that's done. And I've seen $300,000, I've seen $100,000 in some other markets as the liability policy. Well, that can cut your insurance costs down, but do you really want to take that risk? I don't want to take that risk. The second thing is deductible, okay? So typically we're looking in Oklahoma, $1,500, $2,500 deductible. We can go to a higher deductible. Okay, and that can decrease the cost. Not a lot. If you go to $5,000, it's not going to be a lot, but it is going to decrease the cost. Then let's go to replacement value versus actual value. Let's say you buy a home at $300,000 and it's actual value. Well, what that basically means is if that home is a total loss and it costs $400,000 to fix it back to where it was, because you got money in terms of getting all that stuff out of there, taking out the slab, taking out all the plumbing, electrical, and everything, and starting over. So you have destruction cost, then construction cost, and it's $400,000. Well, actual value says you get $300,000. So now you have a deductible of $5,000 plus $100,000, and so you're out a lot of money versus replacement value, which says we're going to replace the house. Now there's limits even on replacement value, but if it's $300,000 to $350,000 to $380,000 or something of that nature, yeah, it's going to get replaced. And so you're only out the deductible of $2,500, let's say. So that's extremely important. And then finally, and this is really important, loss of income. Let me give you an example. I had someone that bought a property, a new construction from me, and the people, I don't know if they said it themselves, but there was a fire. And the fire caused them to have to move out. All right. And that was about 4 months because, you've got to have the adjusters come over. You got to negotiate with the insurance company, get the subcontractors, get everything fixed. So you're still paying your mortgage every month, those 4 months, but you're going to have to basically, eat that if you don't get loss of income. And that is the other thing that's critical. In our insurance policy, we do loss of income. So the insurance policy is going to pay you for those 4 months so that you're not losing a tremendous amount of money. So I'm probably going on too long about insurance, but it just really bothers me that people might put you in harm's way. And that's my opinion. They're putting you in harm's way. You need to be covered. You need to have real life insurance that's going to take care of you.